talking about AMD and talking about NVIDIA. So clear divergence in these stocks here today, folks. Woo! Whee! Did that feel good? Oh man, been building up that baby for a little bit, and I've just been saying, let me just wait on that one. So there you go. NVIDIA obviously outperformed AMD in a substantial way today, right? AMD was down, almost 4%. NVIDIA was up 4%. Now, today should have been a huge day for AMD. Should have been an amazing day for AMD, right? Here's the day where they're going to show off their new products and get everybody excited for where AMD is going with AI in the future. And this ended up playing out as one of those sorts of days that, they call buy the rumor, sell the news type day, right? Where everybody was so excited about this day, it actually comes and then the stock just sells off as a trading day. And their main competitor, NVIDIA, obviously just goes up and up and up, which tells me it's either a buy the rumor, sell the news thing, or maybe AMD doesn't have it. Maybe they just don't. Maybe they're just not going to be as competitive with NVIDIA as maybe folks were hoping for. I've got to dig more into the tech side. I got to look at what some, people that really know their crap on the tech side are saying in regards to this, and not just what Wall Street's looking at. So I'm going to have to dig in here and see what exactly is going on, because this is, I can tell you, it's one of those two scenarios, and I don't know which as of right now. Now, Oracle, surprisingly, this stock sold off and off and off as the trading day went along, and I'll tell you what's really important in regards to this whole Oracle situation in just a moment, okay? But I'm looking at Oracle now. I've never owned Oracle in the past, never really been interested in the stock, but I saw their recent numbers here, folks. I'm going to do some pretty in-depth digging on Oracle over this next week or two. I can tell you that much, okay? Their total revenues for the fiscal year 2023 came in at up about 22% on a constant currency basis. But look at some of these growth rates and some of these business lineups, okay? Cloud revenue was up about 54%, 55% constant currency. Cloud infrastructure revenue was up 76%. Cloud application was up 45%. Q4 Fusion Cloud, ERP, was up about 26%. NetSuite was up about 22%. So I got to do a little digging on Oracle because these numbers are extraordinary. And I'm looking and I'm like, maybe Oracle's kind of a steal deal in relation to this, right? I'm looking at Oracle at forward P of 20 or so. And I mean, when you look at some of these growth rates, folks, 54%, 76%, 45%, I don't know, there might be something here. So I'm going to do a lot of digging on Oracle over this next few weeks and see if this is the next big opportunity in the market. Because I can tell you, with those sorts of growth rates and some of those business lineups, it's definitely catches my attention. Like, I should probably do a little research. And especially when it's trading at a forward P of 20. If this was a stock trading at a forward P of 50 or 60, I might not be as intrigued. But at a forward P of 20, it's likely worth a little research here, okay? Now, in regards to AMD, in Oracle here, okay, here's what the bears are going to say, okay? Because both of these stocks just fell as the trading day went along today, okay? The bears are going to say that this was the day AI died. That's what the bears are going to say, okay? And they're going to say, look at what happened with Oracle. It was up big after hours and then just fizzled out as the trading day went along. AMD, so much hype and excitement about what they were going to talk about here today. That just fizzled out as the trading day went along. And so this is the day AI died, okay? And, these bears run to these conclusions, and sometimes they're grasping for straws. I wouldn't get too confident about the whole, this is the day AI died. This is going to be a multi-year play out here, folks. A multi-year play out. This is not like it matters for a quarter or two and then no one cares about AI anymore. This is going to be a multi-year play here. And there's going to be some moments where it seems like it's dying, and there's going to be some insane moments when it seems like, everybody in the world cares about AI. But the bears are always grasping for these straws about but that's what they're going to say. This is the day AI died. Okay, we'll see about that, okay? Now, in regards to Meta, this is a stock that's starting to, let's call it, not really go anywhere. And people are looking at this and are like, well, what's going on with Meta? It's kind of been around this 270 range here for a bit, and it's just kind of chilling. In my opinion, Meta's waiting, okay? What is Meta waiting for? Meta's waiting for one of two scenarios for this next major move up in the stock, okay? The first scenario is the whole market moves up because of clarity around CPI and the Fed not having to raise anymore and those sorts of things. Okay, that could be the first thing Meta's waiting for, or a bad report and then the Fed, it's said they still have to raise, and then obviously that would push Meta stock back down to like 240, 230, something like that if that was to happen. Okay, so it's waiting for that. The second thing is waiting for next earnings report. Next earnings report is going to be huge because we should start to see a nice ramp up in EPS, in profitability for the company. And then we should get a very strong guidance of some kind, whether it's numbers or whether it's commentary, specifically around revenue and more so around EPS in the back half of this year for Meta. So those are the two things this stock's waiting for it to make its next major move in either direction, okay? If I had to guess, I think the next major move will be up rather than down, but we'll see what happens. At the end of the day, whether Meta's at 270 or 230, the stock still is actually a buy. As much as it's climbed, it's crazy that it's still a buy, but bottom line is you look at the valuation metrics on the stock and you look at its future growth, it's still actually a buy here for Meta, okay? Target. So, obviously this stock just gets wrecked and wrecked and wrecked and wrecked and wrecked, okay? Target can't get out of its own way. It's like the stock just goes down and down and down and down. It's like people are looking at it like, oh my gosh, okay? This is since mid-November. Mid-November, the stock's down about 30%. Now, look at the market since mid-November. Look at Meta, NVIDIA, look at all these large cap companies, right? Tesla, you can go through the whole list of them. And then you look at Target down almost 30% since mid-November, and it's like, what is going on here, okay? So in my opinion, in regards to Target, okay, here's what I'll say, whether the stock's a buy. I would say it's a pretty safe buy now at this point in time. It's a very fair valuation on the stock. We're trading about 15 times this year's numbers, about 12 and a half times next year's numbers. Very fair valuation. I can tell you if they do miss the next earnings period in terms of miss EPS for whatever reason, if that even happens, I can tell you a lot's already been priced into the stock with how big it's moved down already, okay? And so my 2 cents on this one, it's a fair buy. It's not the most attractive opportunity in the world in terms of risk reward, in terms of like, wow, it's got some crazy upside. I'm going to double up my money, triple up my money. Wouldn't say that. But in terms of, are you likely to make 20% on the stock over the next 12 months or lose 20% on the stock over the next 12 months? I would definitely err toward the side of making 20% on the stock over the next 12 months versus the opposite, okay? So I got to say I like Target here, very fair valuation. If the stock drops more, let's say it drops down to 110, 108, something like that, then that's really like a load the boat situation. That could even be potentially some leaps, some calls. The best case scenario would be if Target really continued lower. Gosh, at some point in time, I would have to even consider like 2026 calls, which would come out in like September, which, is a little risky, but gosh, it's you push down the valuation enough. Gosh, you have to consider some of these things, right? Now, inflation, Jerome Powell, okay? And we'll talk about something very intriguing that's going on in the market right now. So Jay Powell, all focus is going to be on this man right here over this next 24 hours or so. And so obviously CPI coming in at 4% here today. That was a little better than Wall Street expected. Almost everybody on Wall Street I saw was expecting 4.1%, 4.2%. That was kind of the consensus average out there, 4.1, 4.2. So it came in better than expected, right? Not as good as I was thinking it was going to be. I was thinking 3.8 or 3.9 personally. So to come in at 4, it's kind of in between those bullish and bearish scenarios. Some bears were thinking 4.5, 4.6. So those bears were way off by a mile, okay? Consensus was only a little off. So Jerome Powell's going to walk a tightrope tomorrow. He's going to say, hey, we're pausing, but we're going to keep an eye on things. We're not ruling out future raises of interest rates. We're not ruling out any of that. We plan to keep rates here or higher for quite some time. He's going to say things along those lines, maybe just not in that exact word choice, but that's what he's going to lead on. He's going to try to talk the market down. We'll see if the market buys it or not. I don't know. That will remain to be seen. But that's what he's going to do. He can't come out and announce victory tomorrow. CPI is still 4%. It's still double what the Fed's looking for. The Fed's looking for something around 2, right? Or just above 2. So 4, we still got a gap to close here. Yes, it's great progress from the 9% plus we were at, but it's still not where we got to go. So he can't announce victory tomorrow. He's going to say, yes, things are moving in the right direction. We're happy with the progress that's being made on CPI, PPI. Great. But we're not ready to lower interest rates. We're going to be ready to raise rates if we get any substantial spikes in inflation. He's going to talk like that. And it's what he has to do. And I don't disagree with it. Now, the question is, what does the market do, right? Does the market react to that? In my opinion, the market should not react positively or negatively tomorrow. It just shouldn't. It should not react negatively or positively tomorrow. Like, all this is kind of known. Whatever Jerome Powell, unless he says something shocking, should be known. So if the market reacts in any substantial way tomorrow, it's likely just traders kind of playing around, trying to get things positioned however they want to get things positioned. But there should be no bombshells he drops tomorrow. There should be nothing crazy out of the ordinary. He's just going to remain stern on, we still haven't won this war. Things are going in the right direction, but we haven't won. And he's going to leave the door open for potential future rate hikes, which likely aren't coming, but he's going to leave the door open for that, okay? Which, might give actually the market some excitement, because you can always look at these things negative or positive. If he leaves the door open for future rate hikes, then that means that the Fed doesn't see a horrible economy coming, right? So you can always look at these things positive or negative. There's always two sides of this coin, right?